Welcome to our podcast, Deal Diaries. I'm your host, Shalu, today. In this podcast, we discuss M&A stories of successful business owners, global buyers, and stakeholders globally. And today, I'm excited to welcome Pat Patel, the founder of Intelliswift Software, a digital product engineering data and AI company that was acquired by LTTS last year. In this episode, we'll discuss about Pat's journey from building this company to successfully selling to LTTS. So, congratulations, Pat, and thanks for joining me.
Thanks for hosting me, Shaluk. It's a pleasure.
How are you doing today?
Doing well. It's a great day.
Nice, nice. So tell me, what inspired you to start this company?
I started way back in 2001 during the dot-com boom days. I had another organization where we worked in a similar capacity, a product-based services organization where I was the CTO and a COO. But the dot-com boom happened in 2 years and it also busted in 2001. And along with
Mm-hmm.
that, a lot of companies shut down, a lot of our clients shut down. So we had to re-strategize, and I separated out from that organization and started out on my own. In 2001, I launched Intelliswift Software Inc. to focus on new age technologies. During those days, it was more of BPM and web services with focus
Got it.
on the internet technologies. Yeah.
Nice. And did you start all alone or you had a team that time as co-founders or
Uh, No, because it was a pretty rough time. I came out of a bankruptcy, so I started out on my own.
that's great. And how long did it take to you to get from 1 to 5 member team or 1 to 10 member team?
Well, like a typical organization, we bootstrapped, and I was not looking this time on for any investments, external investments.
Okay.
So initially, it took us like pretty much a year to ramp up to between 5 and 10 people.
Mm-hmm.
But then we were consistent and we were focused. So we were able to grow pretty fast in the very first 3 years.
Nice, nice. Good to know, yeah. So Pat, tell me one thing, right? I know you went with an acquisition offer after 100 million mark, right? But before even going to M&A story, right? A lot of companies want to achieve this. So can you share some insights or what strategic steps did you take to achieve 100 million mark?
Well, we call ourselves a 20-year-old startup. We always had the mentality of a startup, even
Mhm.
though we kept growing. We insisted on experimenting. As you are
Okay.
aware, the market kept shifting over the period,
Okay.
and a lot of consolidation happened. Even on the client side, there's a lot of VMO procurement changes that kept happening. They became a lot more powerful. So we had to keep changing our strategies from focusing on different avenues of growth, whether it's immigration based or whether it's focusing on procurement, vendor management, or whether focusing on specific areas of technologies. As I mentioned, we started off with web services and BPM
Mm-hmm.
technologies, which in 2001 was largely in demand. But then we had
Okay.
to obviously keep changing our strategy based on our customer needs, based on our customer focus. And we decided to focus more on product engineering and
Okay.
data, primarily because our customer base was mostly in the Silicon Valley, and the demand for those customers was more on product engineering. So, one thing you have to realize, if you want to grow, you have to look out for the changes in the market. And we always kept saying, change is the only constant.
Yeah.
You have to be strategizing. We even had changes in our management team
Okay.
almost three times over period of
Nice.
20 years. So you have to uh, keep that option of being open to change.
Got it, got it. So adapting to the market needs, having the right team as per the size of the company is very important, right? And do you think any external advisors you had that also helped you?
Initially, we did not, but I think having a mentor and advisor is very, very important. Even when we were growing, I had different stages. Uh,
Okay,
we have different advisors. So
okay,
again, up to a 50 million mark, you have a different set of advisors. Then you want to bring in a different set of advisors when you're growing from that 50 to the 100 mark, right? Uh, as the company grows, you also need a new set of folks who have had that experience to
Mm-hmm.
guide you through those changes.
Got it, got it. Makes sense, right? So now coming back to my favorite topic, M&A, right? So what triggered you to sell that company? Why not to make it a billion-dollar company, right? So what were the factors that made you think that this is the right time to sell? And why not at 50 million, 20 million? I'm sure you must be getting multiple offers.
Yeah, as soon as you cross the threshold of 30 million, I think most companies start getting calls from either strategic buyers or PE buyers or even brokers and firms who are specializing in M&A.
Yeah.
So you have to choose wisely on who you want to talk to, who you want to expose your details with. And unless you are sure and ready for the market, you should not start kind of putting yourself out there, is my opinion. One is it does take away a lot of your energies if you are
Okay.
getting into the space. And like you asked, like, why not go public? Why not wait till $1 billion? It depends on the timing for everybody, right? I felt that, and I always felt that I was a good startup entrepreneur. And
Okay.
even when I was like 25, 30 million, I kept telling people my capacity is up to 100. And then I will either need
Okay.
a new set of team and go public, raise funds, and go the other route, or I may exit at 100. So I had that goal early on of that number, that magic number, when I want to look out in the market for. And we
Got it. No,
prepared for that.
got it. No, I completely agree, right? Because I also hear the skill set that you need from making the company from 100 mil to $1 billion totally different what you need, right? And you need to keep evolving. So and I'm sure you must be getting offers at 30, 40, 50 mil, right? So did you ever entertain those offers or had in conversations, or you're very clear, like, no, I have to meet my 100 million mark before that, no discussions?
I entertained a couple, but like I said, we would cut it off very
Okay.
fast. We those conversations, we would make sure that we did not start delving into the details or start getting ourselves kind of sharing our energies in those areas. Plus, you also have to worry about your employees and their morale, right? If you start talking about an M&A early stages, then you may
Mhm.
start losing some people or you may start seeing their interest change, right? So
Got
we wanted to make sure that we were very clear in our messaging also, both internally and externally, that we
got
are
it.
not ready and we knew that we would be able to accomplish what we wanted to.
That's great. That's great, right? And why not PE? Why strategic? I'm sure a lot of PEs do get excited at this revenue range.
Typically, what we had seen with the PE markets is they were always in that roll-up mode or a roll-up model.
Mm-hmm.
And I was very clear that I would want to align myself with a strategic because
Okay.
we were very technical from start, right? So
Okay.
PEs are more numbers driven, and we are more strategic in terms of what can we offer to our customers, which could be lot more beneficial with the
Mhm.
acquired company, right?
Got it.
Because we always cared for our customer and we always got great reviews from our customers for
Got
uh, our offerings, right? So we wanted to make sure that we went with a strategic because that will help both our internal employees as well as our customers.
like you always said that you wanted to sell at 100 million mark, right? So were you preparing to get this exit 2 to 3 years in advance? Like, did you knock or did you speak with few buyers or some people, or do people did knock your doors? Like, how was the process?
So as I mentioned, I mean, you always keep getting a lot of calls or knocks on your doors, right? We were very clear that we wanted to reach that 100 million mark before we
Yeah.
go out to the market. But I would recommend for any organization at this size, you have to prepare well in advance. I mean,
Okay.
it takes at least 2 to 3 years before you really are ready for the market. You have to
Okay.
start making audited books. We were all doing reviewed, and I'm sure I speak to a lot of other people in our industry who are similar sized. Pretty much, we are either just getting regular CPA to file our taxes or just do reviewed.
Okay.
Most people do not spend, including us, we did not spend on audited
Okay.
reviews, right? So, 2 years of audited results it makes it much more easier for a larger organization to look at you very differently. You
Got it.
also have to make sure that your operational efficiencies are in place. You got a
Okay.
lot of your forecasting, budgeting, all of your sales processes very
Mm-hmm.
tight. And all
Okay.
that requires a lot of discipline and a lot
Got
of
it.
preparation. So I recommend that at least 2 years before you start planning, before you
Got
start
it.
going out to the market.
Got it. Got it. And how many potential?
Especially if you want a uh, uh, good multiple, because companies who come in, they want to make sure that they are the buyers, especially if it's a strategic buyer, right? They want
Yeah.
to make sure that your books are in place, your operations are clean, you're streamlined, your contracts are all clean. So all of those things matter, and that's when they are willing to uh, give you a better premium.
Got it. I'm sure everybody would want a valuation, better valuation, right? So yeah. And how many potential buyers did you speak with before going with LTTS?
I mean, on and off, we were talking to at least one or two every
Okay.
6 months, right? So, but we were very conscious. Like I said, we did not entertain a lot of people. I mean, I could have. I used to get a lot of knocks on our doors, right? Every
Okay.
15 days, I would get an email from some PE company or somebody representing a buyer or somebody mentioning, oh, our buyer has targeted your name and so on and so forth, right? But we did not entertain. We were very clear on who we want to even talk to, right?
Got it.
We were very aware of just going and talking to some specific strategic buyers, right?
Got it. Got
That
it.
was important to us.
And why LTTS and why not other buyers? Just curious.
Um, there was a lot of good synergies we felt. LTTS came from that product engineering background,
Okay.
uh, and uh, I mean, they came from pure engineering background, to say.
Okay.
And we were primarily focused, 80% of our business was focused with ISVs,
Okay.
and product engineering was our core focus on some of our customers
Hmm.
and data. And those were the two areas. And we also saw a lot of synergies in the customer base that we had.
Okay.
So that became a critical decision making for us that, hey, there's a lot of good synergies here, both from supporting our customers, the
Okay.
hyperscaler customers that we were going after, and they were
Hmm.
interested in too. And they also had presence in those customers. So that made it a huge advantage for both of us from the
Got
synergy.
it. Got it. And also cross-selling, upselling was one of the reasons that you guys found synergies because they were coming from pure engineering and you were coming from product engineering and data.
Absolutely. That also made a great synergy for us because although we were in the same clients, we did the work with different divisions within the same
Yeah.
clients.
Got
So
it.
that became a good, huge advantage for us to showcase the strength in the clients.
So Pat, just curious, how are deals structured in your space? Like a lot of founders ask us, like how are deals structured, what to expect, what not to expect. So what's your view on that?
So typical deal structures in our organizations are obviously based on a lot on the EBITDAs,
Mm-hmm.
uh, a lot on customer focus or any niche areas of expertise, but also the deals look at the management teams, especially when
Okay.
you have size, right? That is also of importance because who's going to be taking over what. There's also importance given to your growth pattern
Okay.
and what is your forecast. A
Okay.
typical deal structure that we have seen in most organizations in the past, even I'm part of TechSav Alliance, which is a
Mm-hmm.
nonprofit, one of the IT and engineering services industry in the US, and I'm on their board. and I have seen other companies also where the deals are structured where you get around 60% upfront and then earn-outs over the next couple years. So you should expect that kind of structure in most cases, a 2 to 3 year earn-out and some percentages upfront. Ours was a different deal, but for a different reason. Yeah.
Got it. Okay, that makes sense.
Typical deals, you should expect that.
Got it, got it. And when you were dealing or when you were going to the process, right, did you ever feel that, okay, it's not working, or maybe should I step out, or there were some things that were not aligned, right? Can you throw some light on that, which can be taken as a learning by multiple founders who want to sell?
Yes, definitely. I mean, there were times when we were jittery. Uh,
Okay,
in fact, there was one time when we felt that we were not ready because our contracts were not ready. And I felt that we did not have the right legal support that we needed.
okay,
So we changed our attorney. So having those things lined up is also very important.
got
Having
it,
the right team to back you up is also very important, both internal and external.
got it.
Even the investment management company that we had, right? Even those guys were very, very instrumental. So those teams that you choose is also very important. Your legal, external teams that you bring in, right?
Got it.
How they are going to perform. So that is important too. And then obviously, every transaction has its pros and cons, right? So there's always some challenges that you face,
Got
and
it.
we had our challenges, but it's never smooth, uh, and it did take 6 months over.
Got it, got it. Yeah. And how do you go about choosing these partners? Like a lot of companies, they look for bankers or due diligence firms or advisors, right? But they don't know where to start. Like they start by asking their friends or doing Google search. So, what is your advice on how to find the right partners or right for your business?
Well, one of the advantage we had was our advisor is coming from that industry, so
Okay,
that helped a lot in choosing our banker. But then also the law firm, we had experience with this law firm, so we went with them. But always ask for as many references as you can.
got
Um,
it.
and then check on those references. I mean,
Hmm.
people will give the references, but you also have to really grill and make sure that you talk to people who have gone through this journey. I think that
Got
is
it.
very
Very
you
important.
talk to 2 or 3 people who have gone through this journey, ask them the right questions of the pros and cons in choosing and what were the hurdles that they faced with their existing attorneys or their bankers and so on, right? And that knowledge and experience will tell you a lot of who you should go with or who you should choose, right? Again, make sure that you are very cognizant of the fact that what size you are,
Okay,
because if you are a smaller size and you bring in an Ernst and Young, it may not be for you, right? Or if you are a little larger and you bring, so you always want to make sure that the bankers or the people you bring on board have done similar sized
similar
companies
size.
and similar areas of expertise.
Okay.
Otherwise, chances are that they really don't know the challenges you have or what you will have to go through, and that can make or break your transaction.
Got it, got it. And if somebody has to ask you what are the different type of people or group of companies or advisory board you should set when you're selling or planning to sell in 2 3 years, right? Like apart from having a due diligence firm, so legal or financial work, right? What are the different type of people or companies we should have?
Um, well, like I said, depending on your size,
Yeah.
you bring in people with experience in their, so you ask them what is their sweet spot.
Okay.
What are the 80% of their customers that they have done the
Okay.
transaction, right? That is it. That is important because if they have done billion-dollar companies only, I mean,
Mm.
are you sure you want to bring in somebody that that kind of background? One is you are going to pay a lot more, and two is they don't have the experience of the challenges faced by much smaller organizations, right? So,
Got it, got it. Makes sense, right? So now moving to the other topic, that is advice to the founders, right? So founders who want to sell in 1 to 2 years, let's say they are less than 50 million or 15 million above, right? What's the most important advice you should give to them?
well, one is, are you mentally ready for this?
Okay.
Um, to set up the right teams around you,
Okay.
because it will put a drain. We actually realized early on that uh, we should not, I mean, we had a management team, myself, the CFO, and we had a president who then became the CEO. And we were all three initially involved in everything. Then we
Okay.
realized quickly that this is not the best use of our time, and business started suffering. So you don't want to do that, right? You want to
Okay.
make sure that you break it up, that hey, you let the CFO do their role, you drive the strategy, let the
Okay.
president CEO do their job. They need to focus on the day to day also, because it will take away your time. You will get distracted, so you have to be
Mhm.
very, very careful on making sure that your business continues to grow, right?
Got it.
And you're not defocused, because it will drain your energy. The demands are very, very high when you are a larger size organization. They will
Mm-hmm.
ask for a lot of due diligence, both on the operations side, the contract side, the finance side, and large companies have large teams. I mean, we used to have a due diligence team on the other side for almost 10 people on their financial side, and
Okay.
our financial team was doing the regular work and getting dragged in the reporting, right? So it takes a toll on the organization. So you have to be mentally ready for this and
Got it.
be prepared. Bring in some external help if required.
Got it. Got it. And when do you think is the right time for founders to sell? Like a lot of people come and ask me, right? Hey, I'm getting a lot of inbound offers. What's the right time? They're confused, right? Today they say, okay, let's sell. Tomorrow they say, okay, let's not sell, right? So, what advice do you want to give to people on the timing to sell?
Well, there's never a good time or a bad time. Let me be very honest. Okay.
Mm-hmm.
If you are ready, that's the best time, right?
Yeah.
Because markets will keep changing. Today, in within 6 months, you could see the markets change because something happened on the geographic, I mean, level, or the geopolitical scenario change, right?
Okay.
Are you going to just keep on changing your mind that, hey, no, maybe we'll wait, you know? So you have to also be aware or cognizant of the fact that, look, markets will change. Are you aware of what your customers are? And do you have the intention to continue to keep working, right?
Okay.
So everybody has their personal time also, right? I mean, I could have sold 5 years ago. I got
Mm-hmm.
offered 5 years ago, right? Was I ready? No. I mean, this time on, I was ready because I was like, it's time where I have been working also for so many years, and maybe I want to do something else. So it depends on what the owners want to do, right? Some owners may benefit by selling now and then going and opening other businesses. If you're an entrepreneur by heart, you will do that in 2, 3 years, 4 years, 5 years, right? I'm already investing on the other areas other than technology. I have a non-compete, and so I'm honoring that. And but there are so many other business opportunities. I'm going to real estate, and that was something my passion, right? So it all depends on whether what you want to do with your life, right? And maybe people want to just retire and play golf. So it all depends on uh, people's personal preferences.
Yeah. But I
Markets will
think,
markets will always keep changing, right? I mean, today there's an AI wave. People are jittery that hey, will services even be required, and
yeah.
which is a challenge, right? So people do come and tell me that hey, you sold at the right time.
Okay.
It just happened to be that we were last whole year we were ready to sell, right? So, but if you would have asked me 3 years ago, maybe I was not ready because mentally I was not prepared to sell.
Got it.
And I had a goal. So once you reach your goal, then maybe you have a goal. And we were ready. We knew that, look, when we were 80, we are going to be 100 in a couple years. So let's start preparing.
Yeah, I think in your case you had that clarity. But when I speak to a lot of founders, let's say 10, 20, they're not clear. Like I've seen companies like, okay, I'm okay to sell. And at the last one, even after signing LOI, they just drop off, right? So that clarity is not there, I would say, a lot of people, right? So how
And
do
I'll,
we,
I'll be honest, look, when you are 20 million and you get one customer who suddenly you can see another 5 million coming, right? Then that's almost a growth of 25%.
yes.
So you're gonna be tempted and say, you know what, I'll get better value. So I don't understand their dilemma. We have been there, done that, right? And
Okay.
and maybe suddenly you lose one customer From 20, you are starting to see you are gonna become 15 by the
Ah,
end of the day. Then you are desperate to sell. You're like, let me sell it now, right?
yeah.
So it depends, right? I mean, but again, there has to be clarity, right?
Yeah.
That, hey, what do I want to do? Maybe I want to sell and get benefit of working for the larger organization and grow, right? So because sometimes you get a lot of good backup with a large
Mm-hmm.
organization supporting you, and maybe you can see yourself potentially growing and maybe learning how large organizations operate, and then go out and start something new again, right? So
Got
I've
it.
seen those sellers also where they feel that they can align themselves with a much larger organization and then go out and rebuild something else. So
Got it.
again, it depends, right? Whether you want to go rebuild. Uh, in our line of business, I'll be very honest, a 20, $30 million companies, there are
Mhm.
so many, and they like it as a lifestyle business.
Yes.
So then they don't want to let go of that, right? Because hey, it gives them a great lifestyle, and they
Mm-hmm.
have the great work-life balance. Every weekend they'll pull out their boat and go and do fishing. I know those kind of owners, and they are
Wow.
very happy. They just don't want to sell, right? Someday they may feel that, yeah, you know what, maybe I should sell because everybody else is selling or markets are changing. So it all depends again on what your priorities are.
Got it, Pat. So, other question that I had is lot of people get inbound requests, right? So, how do you manage them? Like, is there a better way of managing inbound requests? Like, what are some best practices that you can tell around that?
So yes, it's very tempting. When you see these inbound requests, you
Mm-hmm.
get tempted to talk to them, right? But like I said, we used to get a lot of those, and it took some practice and some experience to
Okay.
realize which were the real good ones to
Okay.
talk to and which were not. Initially, we entertained everybody, and then
Okay.
we started realizing that look, uh, and we would do a half an hour call. I would say that look, entertain those guys because it's always good to know what's out in the market because they will also share information, right? You
Yes.
know, you always want to know what is your value, what is
Yes.
the markets out there, what is in demand,
Mm-hmm.
because they will kind of come and give you some at least tidbit of information which you can take back and say, hey, you know what, finance team, give me these kind of reports going forward because this is what five
People
of
want.
the people who came to acquire us were
Mm-hmm.
asking, right? So you want to, especially every industry has their own reporting, right?
Okay.
You want to make sure that the metrics or the ratios for your industry
Mhm.
are on your fingertips. And a lot of times owners don't know. We may think we are doing great, but when they really peel the onion and when the M&A folks come in, they
Mhm.
start asking this question. They're like, oh, I have no idea, right?
Got it.
Or my ratios in these areas are not good. You should know your project margin, your gross margins, your cost of goods, your sales, SG&A. You should know these numbers very well, and you should also know what are the industry numbers and how far are we from there.
Got it. Got it. Got it.
So
And when you
that knowledge you'll get by talking to a few folks, right?
no, completely makes sense, Pat, right? It's always good to know what is the market demanding, and this is a good learning to see what is the demand, right? And
Right.
when you do a transaction, right, apart from synergies and client mix and everything, right, are there any softer things that you should take care of? Soft skills like culture of the
Of
company. Yeah.
Oh, that is very, very important, right? Especially as you're growing, right? You want to make sure that what culture you have and what you're aligning with is also equally important, right?
Got
You
it.
want to ensure that you're not uh, you're not working with. That's one of the reasons we didn't go with a PE company, for example, right? The PE company's culture is very cutthroat, very numbers driven, and so on,
Okay.
right? So that's where those things matter. The soft skills do matter, right?
Got it. Got it. No, I think this is good. So what's your next plan? I know you did mention about investing, but are you looking for something else or
I mean, look, technology and real estate has been two of my interests. So
okay.
tech market, I actually ended up going to Venture University and then learning a bit of a ropes. I've become an LP in a couple of the venture funds. Been making direct investments also into
Nice.
some startups. So I love being an entrepreneur, so I love to see other entrepreneurs succeed.
No, makes sense. Yeah. So this is great, Pat. Thanks for your time. I'm sure a lot of people get to learn a lot of from this podcast, and I'm sure a lot of people may reach out to you for some fun advice, right? Maybe in a
Sure.
personal environment and not in open. But thanks for sharing your insight and thanks for joining us. Thanks for your time.
Sure. I'd be happy to help. Thank you.